Take what the wise I've got to impart. These are the principles of the game.
The Compassionate Capitalist Show empowers entrepreneurs and investors alike to create wealth with passion and purpose. Join Karen Rands, a best-selling author, for insights on angel investing, crowdfunding, business growth, and wealth creation. As a seasoned entrepreneur and investor herself, Karen engages in dynamic conversations with industry leaders, successful entrepreneurs, seasoned angel investors, and venture capitalists as they share their proven strategies and lessons learned. Once you listen, you will understand why this podcast is ranked in the top 2.5% globally. Subscribe and share and be a catalyst for the Compassionate Capitalist movement.
There's no giving up and no going back. You must keep an open mind. When you try your best, just leave your tracks and do not fall too far behind. Regret is for the faint of heart. In the end, it's all the same. Take what the wise have got to impart. These are the principles of the game. The principles of the game. Oh, these are the principles of the game.
Hey everyone, and welcome to this live broadcast. I'm Karen Rands, host of the Compassionate Capitalist Show, which is where you are right now, founder of the Compassionate Capitalist movement, and soon to be the Compassionalist Academy. I'm a longtime advocate of what I call compassionate capitalism, building wealth and making a difference. I've worked with angel investors and entrepreneurs funding innovation and creating wealth for over 20 years. In fact, I wrote the best-selling book about it, Inside Secrets to Angel Investing, for those that are watching. And I had some very exciting news, and it was high time that I did an episode focused directly on my core purpose and passion, empowering others to create wealth by sharing in the success of the entrepreneurs that they love, that they appreciate, that are around them. Because here's the thing that's I'm going to talk a bit about history and behaviors and perceptions and paradigms and beliefs and shifts in beliefs as you go through the next 20 or 30 minutes together. But here's one that is all in that together. It is not only a belief, but also a aha moment of a secret, a thing that you just never really thought about because it was a secret. It wasn't something that was talked about. So how would you know about it, right? Unless you went looking for the answer. That is that the number one way to create wealth in America, it happens all the time. We're told it all the time. There's lots of money invested into from government and private organizations to build successful entrepreneurs. That building and owning your own business is the best way to create wealth. We see it because of the millionaires and the billionaires that we love or hate, whatever it is. I mean, everybody that you like, the big names, unless they're a celebrity. And guess what? Celebrities also do what we're going to be talking about today. So, but is to be your own boss, to own your own business. So we have people all the time that will be like, they jump ship from a job because they're dissatisfied to start a business because they want to be able to create their own independent wealth strategy by building a business. And it's hard. It's really hard to build a successful business. But the thing that nobody ever really talks about, and actually probably the number one reason why those businesses of that passionate entrepreneur struggle to succeed, is where does the money come from? Where does the money come from before you go, and I'm off script right now, but you can tell I'm passionate, before you get from idea to, somebody running ads that you're going and buying their product from. Where does that come from? Where does that money come from? Well, every famous company that every famous entrepreneur that did that on the shoulders of the investors that gave them the money to get there. You might know of them as venture capitalists. That seems to be a bigger name, VCs and banks. Because when I was at IBM, that's all I knew. And then I discovered the world of angel investors, immersed myself in it, the secret society, and turned my life mission and purpose is to sharing that information, that awareness, and building tools and to be able to do it, and education for others to be able to be successful as angel investors and now crowdfunding investors, which is why we are here today to talk about the 4 W's So that's kind of like a W. How does that W? That's a W. Four of the four of these, four W's of crowdfunding investing. All right. So keep that in mind. Number two, you didn't really think about, like they talk about Microsoft. When Microsoft went public in 1980s, it created, it's in one of my documents, it's in the resource portal that's in the education program, but it's like, I don't know, 1 million millionaires, 10,000 millionaires. Biggest number of millionaires pretty much ever was when Microsoft went public. That was a combination of employees and all the investors that had invested in it up to that point. So if you've ever thought about, I wish I could invest like the wealthy do, or how can I support businesses that I believe in and grow my own money, like Rich Dad, Poor Dad, the cash flow quadrant, right? Business owners, investors, business owners, investors on the other side of the quadrant. Or I want to start investing, but real estate is too expensive. Yeah, that was a way. We're going to talk about that in a little bit. For a lot of wealth got created for a while, but now a lot of people boxed out, not near as stable as originally thought. And the stock market. The stock market, is it volatile or what? Another thing we'll be talking about. So strap in, buckle up. We're going to take it because you're in exactly the right place. If you want to grow your wealth and make a difference with your money, you don't need to be rich or a stock market wizard. With crowdfunding investing, you can start small, back a business you believe in, and build a financial future that aligns with your values. Today, we're going to break down crowdfunding investing and a powerful, underused way to build wealth, especially for women and people of color, Gen Zs and millennials. I'm going to be covering, what did I say it was? The 4 Qs and what it is, where to find them, who can invest, and why now. So what, where, who, and why. Now is the time. So what crowdfunding investing is and how it is different from crypto or GoFundMe that you might think of as crowdfunding, or stocks and real estate, where to find real vetted deals you can invest in, but you also have to be prepared and equipped to do your own discernment, because history is fraught with people piling on to a deal that really lacked some core fundamentals of what I would call red flags. Who can participate? Hint, everyone, why this is a powerful tool for closing the racial and gender wealth gap. It's real. The wealth gap is real. I don't need to give you the statistics. Hit me up in a comment or come back on the thing and on the show, whatever, and I will show you the statistics. And they may or may not be in the ebook that goes along with this. You're going to get that free companion guide, the 4 W's of crowdfunding investing. It's a teaser, a primer, a basis, because guess what? I'm coming out in a book in a few weeks. I'm not exactly sure when it's going to hit, but it's the inside secrets to crowdfunding investing, creating wealth by investing in those businesses that will bring you passion, purpose, and profit. That's coming out. It is the follow-on companion guide to Inside Secrets to Angel Investing that the digital platform, the DIY education, the Compassionalist Academy is based on. That brought that book to life. And now we fill in the gaps for specific to crowdfunding with this next wave of content that we're creating. So you're going to get that free gift of an ebook that goes deeper into everything that I'm talking about today. And down in the show notes, or when you get that book, crowdfunding investors.com, investing.com, it's in the show notes. You're also going to get a link to the Compassionate Academy. If you sign up before it launches, you'll get a 25% off on your first course, your first purchase there. So, part 1, what is crowdfunding? Let's start with the basics. Most people think of crowdfunding as GoFundMe or Kickstarter. That's reward-based crowdfunding. You give money and maybe get a t-shirt or an early product. But what I am talking about is equity crowdfunding. That's where you actually invest in a startup or a small business and own a piece of it, just like on Shark Tank, but without needing millions of dollars or tens of thousands of dollars to put into each investment. There are different types of crowdfunding, but not all are equal. And we're going to break down the difference between the reward crowdfunding and equity crowdfunding first, and then I will get into the 4 types of equity crowdfunding. So with reward crowdfunding, you donate or pre-purchase a product. You don't own anything. It's great for supporting cool ideas, but it doesn't build your wealth. And this, in fact, and I'll talk about it a little bit later in the program, is the reason why equity crowdfunding became possible. It was enabled by the Jobs Act of 2012, where you buy ownership, equity, or revenue share. It's one of the strategies I teach in the Compassionalist Academy in a startup or a small business or even a growing business. If the business grows, your investment grows. Think Shark Tank for the people, right? So all of those, all those investors on Shark Tank that are investing in these businesses and picking and choosing which ones they like, which ones meet their criteria, you have the ability to do that too, just on a smaller scale, according to your wealth and your risk. Whatever your risk is and the capital you have. And I have strategies for how you can unlock capital that is just sort of sitting, making like little tiny money, and be able to put it into these opportunities and generate revenue and income and profit from those investments into that same vehicle, self-directed IRAs, hint, hint, and get that money back as it earns interest free for your retirement. It's a great way to build wealth for your retirement. If I have the ability, I know that I've got the ability to, and I didn't practice it, so I'm afraid to try to do that now. But I'm going to see if I have the ability to share the chart that I created for this. Does not look like I have it. I don't have it ready. So we're going to not do that. Okay. But basically in the ebook is a chart that goes line by line item on the difference between reward based and equity crowdfunding based, right? So it's important to consider it because it's, like a lot of things have come to market that we take for granted. I talk about this fidget widget. If y'all remember this from a few years ago, the smartwatch, drones, 3D printers, Oculus headsets. They all came to market with reward-based crowdfunding, and those companies went on to become very, very large, big, profitable companies. And guess what? The people that bought that product, they had a product, but they didn't have any equity ownership to share in the success of that company as it grew. That changed with the Jobs Act of 2012. So here's a hint. So part of the things is that people have long thought that real estate and stock were the best types of investments. But even during the Great Recession, 2008 to 2012, many investors lost money in the real estate and stock market. Congress took action to modify those rules and regulations that limited entrepreneurs' access to capital and restricted everyday investors from the potential profit that could be made in investing in those promising entrepreneurs. Crowdfunding investing offers a new asset class with community value and potential for profit. Here's how it works. Crowdfunding investing allows everyday people to invest in businesses they believe in, whether they're startups led by passionate founders, local restaurants expanding to a second location, or tech companies on the rise preparing for an exit, need to acquire another company or launch another product. This is different from the crowdfunding things that most people, when I ask people, do you know about crowdfunding? They'll go, oh yeah, GoFundMe or Kickstarter? No, because what is it? It's money that's given like a donation for a cause or a pre-purchase of a product. Crowdfunding investing, though, in equity means you own a piece of a business or lend money to it that gives you financial terms. Thanks to the Jobs Act of 2012, you no longer have to be a millionaire to invest in startups. The law created several new ways for companies to raise money from the public. There are 4 types of exemptions that companies can use to raise capital legally from private investors, each with different investor rules, limits, and risks. The 4 types of crowdfunding investments are interstate exemption. Local businesses raise capital from investors within their own state. These are often promoted by community groups or local chambers of commerce. You may hear about them through word of mouth or through community newsletters. It's where, ideally, a business is one of the things I promote now that we have all this challenge with the tariffs and companies, trying to figure out how to do manufacturing in the U.S. And it was an opportunity, a lot of companies trying to figure it out since COVID, because when they they first got started, they might have been too small and didn't have the ability to manufacture 5 days a week. And there wasn't a way to do little bits of five piecemeal in the US. So they go offshore where China perfected that. And so you could manufacture a container, a half a container, and get it shipped here, put it in your stores and do it, right? And then over time, those businesses got big enough that they could do manufacturing on a daily basis, but it was just so easy. They'd have to incur all this cost to do it in the United States versus they'd save their cost of manufacturing, because they pay for that, the profit that the other companies make. But, it takes time and planning. And there wasn't, how do you get the capital for that? There wasn't a pain that needed to be solved. Supply chain issues, tariffs, all of those things that have disrupted the ability to, and crunch profits, they're like, they're these taxes that are being passed on to the manufacturers, they're being asked to eat it. That means it's coming out of their profit, and these distribution and channels and the retail locations, it's coming out of their profit, instead of us as consumers having to pay for it, but it still gets passed out. And so that's the reason why we've seen a lot of our prices get higher over the last couple of years. And so it's going to just get worse, right? But if we can show companies how we can invest in their company along with banks that will loan them money for equipment so that they can manufacture in the US, you as an investor can share in their success as they grow their profit here in the United States, because their cost of goods are lower because they don't have the tariffs and they don't have the cost of manufacture. They get to have all of that benefit as they manufacture here. And now robotics and automation and AI automation and manufacturing makes it really cost effective to manufacture in the US if you can get the private dollars and the public dollars, the bank dollars, to put that together. Okay. So it's a growing area that interstate exemption is ideal for, because the jobs are created in your community and you get to benefit with them in the community. Then you also have Regulation D 506C. These are private offerings for just accredited investors. I'm not going to go into that here and explaining that, but really it's, people that are making over $200,000 a year and have $1 million in net worth, right? It's a threshold that the SEC, the Securities Exchange Commission, identifies. Companies using this rule can publicly advertise their offering. That's the big kicker between the crowdfunding and the way things have been done and still are done in the private communities of angels to VCs, right? It is a private transaction and it's not publicly solicited. General solicitation, like public companies, which is what crowdfunding is, general solicitation to the crowd. Okay, so in this case, they can raise unlimited amounts of money under a fee, but only from those high net worth people, which they go, there's conferences for that, special platforms, things that I cover in the ebook about where you can find those deals and how to find them. And they're often, more mature startups that are looking for an alternative to VCs or to bridge the gap between angels and high private equity funds and things like that. They can raise unlimited amounts of money under a 506C and general solicit for that. So Regulation Reg A plus, is often used by more mature companies that are growing businesses. They're ones that have raised an angel round. They were first got started as a tech company and they raised an angel round, but then as do a lot of companies, angels are that, they're not foolproof, and companies, they think they only need this amount of money and they're going to get to revenue this fast. And it turns out it takes longer to get to revenue and they needed more money. And so they have a gap and they end up kind of growing organically because they're making money, but they're just not making it at the rate that they expected when they did their forecast of here's what it's all about, right? This is what our business is. This is why you invest in it. This is what the future is going to look like. And the future doesn't look like that. So they're stuck. They're sort of in this capital abyss. Reg A plus satisfies that problem, because an existing company with good, strong financials can file paperwork with the SEC, can solicit up to $75 million from accredited and unaccredited, that's wealthy and regular middle class people, and they can raise that money and then finish filing their paperwork and be public. So the benefit to the angel investors that were in that deal and those current investors is that they have an exit path. So for the angel investors, they're the ones that might get 10 times their money. The people that are investing under Reg A plus, they might get double their money because, it's already grown to a certain point, and, the amount of growth it can expect from here to there, it's like the difference of ground floor opportunity to, go up to the rooftop and getting in on the 10th floor and going to the rooftop. That rooftop might be 2 floors, it might be 10 floors, it might be 20 floors. You don't really know, but you're going to the rooftop, right? Because that's the exit. The ones that got in on the ground floor had the biggest ride. All right. So that I'm good on telling stories. That was a good one. So mark that one. And then you got Reg CF, right? And so Reg CF is where it's regulation crowdfunding. And that is the one where it is anyone can invest. No millionaire status required. Same thing with Reg A Plus and most interstate exemptions. So for you that are not yet millionaires, making $100,000 or something, want to put your money to work, you're shut out of real estate, you're what up with the stock market, crypto is kind of like, who are all these guys? Like it all seems like, the crime syndicate is hiding their money in the crypto world, right? What am I going to do? How can I put my money to work and make my money work for me? Well, Reg CF is a great way to do it. You can have access to startup companies and companies that are raising more money to do a Reg A Plus, for example, to bring in more investors so they can go public. It's really the cornucopia of opportunities. Companies can raise up to $5 million, and you can start as little as $100. Those deals are found on Refunder, Republic, Start Engine that you may hear about. Mr. Wonderful for Shark Tank that invested all those big deals, he invested in Start Engine. That's how much he believes in crowdfunding. He invested in it as a platform so that he can share in the success. They take 7% of all the money, between 6 and 8% of all the money of people that put into crowdfunding companies on all the Reg CF platforms do it. But he gets to share in that success, right? So he's like a double. I don't know. What do you call that? That's like, I don't know. Give me a word for that, right? So put it in the comments. There's a call to action. Put it in the comments if you have a word for what that's called when you invest in this and you get paid on both sides of the transaction. So that's a great way for early stage startup companies to bridge the gap to get to angel investors, to get that first round of financing, or to bridge the gap for another type of financing, or just to do it that way all the way. And we just had our first company in 2025 go public that raised their first initial round as a startup on WeFunder. So it works. They went public big in the billions. Okay. So those are the 4 types of things for what it is, right? And I'm going to address something that right on, because you're still listening at this point. We're 30 minutes into this. I'm going to wrap it up right here pretty soon. But risk. What about risk? Here's the thing. The number one, as somebody who's been working with angel investors and building angel investor networks for 20 years and helping entrepreneurs raise capital and syndicate their capital raise, I've had lots of conversations. And as I build out this mission to create the Compassionate Capitalist movement, to create awareness, to provide the education and the tools for more people to understand how to make money this way and put their money to work, I have found firsthand, it took me a while to understand, that there's a lot of people out there. If they know about angel investing, 90% of the time they'll say it's really risky, like gambling. More risky than the stock market and the real estate market. But in reality, it is not. It is not. It is not more risky. And part of the reason why it's believed that it is that there's a cause and effect for everything. Sometimes beliefs are created because of lived experience. Sometimes they are created because someone tells someone something, this thing or that thing is really risky. But maybe it is or isn't. Maybe something perceived as risky for one person isn't for another because of a different lived experience or preparation. So let's talk about, I give this an example in the ebook, skiing and scuba diving, right? Anybody can do that. You can buy the stuff. But if you don't know how to do it, if you just start doing it, if you just jump in the water with a tank on, or you go up to the top of a mountain and ski down, is there a chance you might break a leg or hurt yourself? Hell yeah. Excuse me. Yes, there is a chance that could happen. You might get lucky and nothing happens. You're just naturally athletic. But odds are you need the right tools, the right preparation, training, and coaching for that, so that you know how to do it right. Investing is the same way. So when it was illegal up until 2012, from 1933, when the laws were put in place, prior to that, the industrialization of our country, when they were inventing cars, inventing electricity, inventing all these things that we take for granted now, telephones, there were people that were investing in those startups and sharing in their success as they grew. And then when the stock market crashed, those people went to the Roosevelts, the DuPonts, the Gettys, the Fords, all those people, they went to the SEC and said, we don't want to have to disclose all of our private transactions. We want to be able to continue to invest in each other's businesses and help each other build these companies that are building the country, that are solving the problems of the country. And the SEC said, sure, this is how we're going to do it. We're going to carve out these exemptions. So they carved out the exemption called the Reg D exemptions. So along the way, though, it was a secret, right? It meant that the entrepreneurs had to know the investor and they had to already be qualified as that high net worth investor. So an investor, and then broker dealers came along. So an entrepreneur could find that investor through a broker dealer, or if they knew that investor. And then angel groups came along, and angels were the pathway for them to get to those investors. But they couldn't just go out and advertise, right? They couldn't just go out and stand up on a stage or put on their website that they were raising capital. And then with the Jobs Act, when they found out, when the Congress looked at, I talked about some of these things. Oculus headset. So let's look at Oculus headset. Oculus headset was $2.5 million, I think, we put into it as a reward base that brought it to market. And then about $17 million was put in by private investors as it went out of crowdfunding into the regular mechanism of angel investing, all the way to when Mark Zuckerberg bought it. I thought it was 800 million, but it's like 2 billion was what I just looked up before this, right? So what they found is that those people that bought that Oculus headset, what did they have with their $1,000 a couple of years later? They had an obsolete Oculus headset. Had they been able to invest, like that company that went public, it's a biotech company, if they had their ability to invest, and that $1,000 was equity in that company, 1,000 shares, 10,000 shares, who knows what it would have been, right? And they got bought out for $2 billion. How much money would they have made? Would that $1,000 be worth $2,000, $20,000, $200,000? We don't know, because it was illegal then. And so because it was illegal and you could only go through brokers, what ended up happening over that 1930 to 2012, like roughly 80 years, right? Is that the people, if you had enough money to go to a financial planner or a wealth manager, first of all, it was never talked about because it was secret. We had to even close our doors when I was running the angel group, so people walking by couldn't hear the deals. That's the way we treated the laws. They couldn't hear about them. And so if you had a deal, like your neighbor or your guy at work, whatever, was starting a business and you wanted to give them some money because you had the money and it looked good, you were thinking about buying a franchise, but or investing in a franchise, but now you could invest in this guy's business and you really like them, your financial planner, your wealth manager would say, no, 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 no. We talked about that. That's like gambling. Don't do that. You can invest in real estate, because real estate's not considered an equity asset. And so, but you have to invest in these things that my company, my broker sell, right? This stuff over here, you have to invest in that, not this. It wasn't because it was more risky, because millionaires were doing it. It's because they were told they would lose their license if they sold anything that didn't get sold by the broker. And real estate couldn't be sold by the broker, so it was okay. But private equity transactions, even though startups couldn't work with brokers because of a whole other reason, right? That's what created it. So if you were that wealthy person thinking about it, when somebody said something to you, you would say, oh, no, 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 I can't. My financial planner says it's like gambling. I'm going to lose money. But the government said, hey, look, everything got trashed during the Great Recession. People lost all of their retirement in the stock market. Their 401ks tanked. They lost all the value of those rental properties that they had mortgages on because people couldn't pay. Same thing with the COVID in 2020. And then again in 2025 with the stock market, right? There's risk in all of that. But they said, look, these people could have why are we limiting their ability to invest in these companies? We don't tell them they can't go and throw 20 grand away in Vegas on the roulette table. We don't tell them they can't invest 5 months or $100 a week in a lottery ticket. Why are we telling them that they can't invest in entrepreneurs in their community or the startups that they see are solving a problem that they like? Just like the institutional giant revenue family number people, the Vanderbilts and Gettys, they invested in that car company because they knew people needed to have a better way of transportation than a horse. They invested in the electric company because they knew that people needed to have a better way to see at night than a candle. They invested in all of these things, a telephone system, because it was better for people to be able to call on a line than having to go tick, 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 solves the problems and makes life easier. You can invest in things that will save our planet. You will invest in things that will solve an AI issue, that improves whatever it is. Use your imagination. If you think there's a problem that needs to be solved, odds are there's an entrepreneur out there trying to solve it. It just needs your money. I love this stuff, and it's so exciting. And I just really, really, really want people to know that they have the ability to do it and how to do it right. Okay, so let's get back on track, Karen. All right, so this went on forever and ever and ever, and that's created this lack of awareness right now. And the U.S. Treasury, the SEC says the reason why we don't have enough money for all the entrepreneurs that need money out there is because of this false thing that they've created that made this thing a secret, right? And also made it perceived to be super risky. So it's not. It doesn't need to be a secret, and it's not risky if you know how to do it. So where do you find the deals? All right. So where do you find them? There's, depending on the platform, the type of thing, there's SEC registered platforms that are legit, regulated, and open to the public. Refunder, Republic, Honeycomb, Credit. That's a company that I work directly with. Start Engine. I already use those. They all are Reg CF platforms. Some of them, like Republic, have multiple. You can get Reg CF, you can get Reg A Plus on there. Interstate exemption, on the other hand, is kind of harder because there's not a lot of platforms that carry those. It's more word of mouth. It's through your chamber, through your business chamber, your Rotary, your church, word of mouth from people that they can reach out to you and say that they're raising capital. You might see them at an event or hear about it. And, as about 2/3 of the states have interstate exemption laws in place. Some of them have different kind of rules, so you have to look. That's I'm working within my local community to try to create awareness of these organizations and the state and the legislature to promote these companies that are doing interstate exemption, so more people know about it and more people can invest in them. Okay, so that's where you find them. That's how you find them. You have to do Reg CF. I go into this in much more detail in the ebook. Reg CF has criteria because it's regulated by FINRA, and Reg A Plus has conditions through the SEC. But you're still responsible for your own due diligence, your own verification. None of those platforms are responsible for you making a bad investment decision. Okay, so you just need to know that, right? Don't know where to start. I made a guide that you exactly where to find legitimate deals and avoid the scams. And that's in the Compassionate Academy. The link is check the notes for the link. And for those that sign up before it launches in June, you'll get 25% off on your first courses in there. Okay, so want to invest in your coffee shop down the street? Here's a great example. A coffee shop down the street that you love and go to wants to open up a location in another town that's 15 miles away. It's very hard for something like that to get money from a bank to go and do that, or to save up enough money to go do that. But they can tap their customers, investors, to invest in them for a share of their revenue until they pay back like double their money. Might take 2 years or 3 years, but they get double the money. So if you put $1,000 in, you get $2,000 in, or $3,000 back, right? And you get to be the person. You might get some free cups of coffee as well, right? So those are a great way to invest locally for businesses that you love. So pay attention now that you're aware. I've been advising companies to do this that I mentor through various incubators and accelerators, and it's still such a new concept, even though it's been around for a decade. And then you have global problems, things that you really are passionate about. You go find them on the platforms. Who can invest? This is it gets really exciting. I've already talked a lot about the exemptions and the secrecy, but let's talk a little bit more. Before 2012, again, remember, only rich people could invest in early stage companies. That was the top 2% accredited, sufficient income and net worth before the 19th. But here's the thing, the reason why we have the wealth gap and the reason why this is so important for women and people of color and millennials and Gen Z. So for many people, many people in those demographics that I just described, were not able to buy a home, get a loan for a business until the 1970s. There were laws restricting it, and I have the whole table and timeline in the ebook. But they were not. It was Supreme Court decisions and then legislative actions by the government that enabled people of color to be able to get loans in their own name without discrimination of race, and women to be able to get a loan in their own name, even a credit card, without having a male cosign for them. Brother, son, husband, uncle, father, whatever, had to sign for them, right? Right. Millennials, they don't really even, because they've never had that issue. But for some of us in the Gen Z category, we were just coming of age to be able to buy a house and buy this stuff after that time. So it's only really one generation that has been able to purchase and build up a lot of the assets that were used to create the middle class in the 1930s, 40s, and 50s, that then got passed down to a generation that could build upon that. They had a house that they could sell and take the money for, or they could move into without having to buy a house, right? They had elements of things that created wealth. Even if they were just middle class back then, because that was when the middle class built. So there's a wealth gap. When you compound that stuff decade after decade after decade, you get a wealth gap. And that's what we have right now. And there's lots of stats. It's in my real book, right? I have lots of stats. And if you follow me on stuff, you'll get all those stats. But this is why this is important for people to understand, and why I'm targeting those segments, because they don't necessarily know. They just know they don't have what they want. They're concerned about the future for their children, whether it's saving the planet or building up something that they can leave their children. So that is why that is so important for you to understand who can invest, because anybody can invest. And the other big benefit on the who is that you can notoriously, it changed a little bit in 2020, but it still lags behind. Out of all the angel capital, so this is the big money, okay? Mostly for tech startups, less than 3%. It's about 2.5%, 3%. It was less than 1% went to Black and brown businesses up until 2020. Then, it inched up a little bit since then. Of women-owned businesses, but prior to 2020, it was about 5% of women-owned businesses got angel capital and VC money. So that kind of do the math on the rest of the world. But now it's at like 7 to 9% because there's more women angel investors. And so, that also means that those businesses aren't growing, that also create the generational wealth. So it is a challenge for startups that have somebody that has a great idea to get the money, if they're not from a community that's already wealthy, to get the money, the $50,000, $100,000 that they need to be able to get the money from angel investors to create a prototype of their product, so those angel investors will invest. Angel investors don't invest in ideas, right? I mean, not to say the crowdfunding people should, but you're investing smaller amounts. You're investing in somebody that's from your community. You're investing in, businesses that and founders that you want to invest in, to give them a step up, give them a hand up, not a handout, because to be sure, crowdfunding is not a charity. It is an investment strategy to create wealth for you and the businesses that you're investing in. They get to achieve, they work really, really, you put your money to work working for these entrepreneurs that are working harder than anybody to achieve their own dreams. They're building a business, they're building a future, and they put the effort in. You, along with 1,000 other people, put the money in. And then together, your money, their effort, they build a business that creates prosperity in the community, for their employees, and for you as an investor. Okay. So that's who. So who gets to build the wealth? You get to build the wealth. Crowdfunding investing lets women, minorities, and millennials back businesses and own a piece of their success. And you learn more and more about that in the ebook, Get the 4 W's of Crowdfunding Investing Today. And then when my book comes out, Inside Secrets to Crowdfunding Investing, and the training, Compassionalist Academy. Those are your 3 stepping stones. All right. So here's what I love most. It really is for everyone. It is the great economic democratization of the capital markets that our government envisioned when they did the Jobs Act. Entrepreneurs can raise capital from anyone, and anyone can invest in those entrepreneurs. You can own a piece of your favorite startup or growing business. It's democratizing all of that. It helps women and minority-owned businesses, helps them raise the money they need from the people who believe in them. All right. So why? Why now is the time? Let's be real. Building wealth has always been about more than just saving money. You don't get rich by saving money or just by buying stocks, because it goes up and down, and real estate costs so much. I mean, you could get into the stock market for $100. You can get into crypto for $100. You can do all of that, but the return is always based on how much you put in, right? Real estate takes a lot of money. You know, if you've saved up 20 grand to buy a real estate property as a rental investment, you can't do that in today's market. Used to be. I bought a whole house out of foreclosure and did all the renovations on it for 60 grand back in 2017, actually 2015, right? So I own that whole thing now. I don't have any money on that. But most people, when they invest, and most strategies say you use the bank's money to leverage, you're getting this asset. But the reality is when you have a mortgage on it, and you have repairs on it, and you got taxes on it, and you got all this stuff, you're really only making a little tiny amount of money on a monthly basis. And you're only one bad repair, one bad tenant away from losing or like in my case, I had to sell a property because the insurance cost in Florida went up so high, I couldn't charge rent higher than what my mortgage payment was. That was a house that I had inherited that had a mortgage. And I had to sell it because I couldn't afford to keep it. It was going to cost me a lot of money, but I was able to sell it, right? During the Great Recession, people weren't able to sell their houses. During, the COVID, they weren't able to sell their houses. They lost that 50 grand and the $1,500, $2,000 a month that they put into that property for 5 years. So they lost $100,000. So when you invest in individual stocks, you lose your $100, your $1,000, your $10,000. It's not something you're putting money into every month, continuing to invest in that, hoping that you're going to get a big payout in the future. You invest once and somebody else is working. Now, they may have a call to action that says, we need more money to go to this next level, and you can choose to buy more equity, but it's not investing in the same thing. You're investing and getting more of the ownership of that company with that investment. So your share of the potential return grows as well, right? That is why millennials in particular, very hard. They can't even afford to buy a house, right? Much less invest in rental properties. So what are they? They could invest in companies, crowdfunding companies, and the strategies I use called the Angel Profitability Blueprint, create income from that and start to save up a nest egg faster that might get them to a house in the future that they can own at the future time. Gen Zs have money sitting in their 401k that's just making a little tiny bit of money, or it's in the stock market, like losing it. People are pulling money out of the stock market, afraid that they're going to lose it. What do I do with my money now? And it's sitting on the sideline in a 1 or 2%, savings thing. You can put that money to work in businesses that are from the ground floor, right, to the roof. right? And be able to, learn how to discern which investments are, if you have a problem that you solve. In my book, I talk about finding a problem that you want to solve and then finding the company that is doing the best way of solving it that you can discern, right? So capitalism, if you think about it, this is why I call it compassionate capitalism. Capitalism is buying and selling. Making money in a capitalist society is about buying wholesale and selling retail, or buying low and selling high. It's transactional. Stock market is transactional. Crypto is transactional. It doesn't actually build anything. It's just one person selling to another person. It's capitalism. Compassionate capitalism, on the other side, or the compassionate capitalist movement, which is people that say, I want to be a part of creating wealth this way, is about building businesses that fuel the economy, creates jobs, pays vendors and other people in their community. They're paying the printer, they're paying the IT guy, they're buying computers, they're doing whatever, right? Satisfies their customers. So they have happy customers that are getting a problem solved that they come and buy more of, right? And sharing in their success, because they did it with your and other people's money. So, it is what fuels our economy. Remember at the top of the hour when I said the number one way of creating wealth is by being a successful entrepreneur, and the secret was the people that they built that on were the people that invested in them. I mean, I have a brewery here in town that, there's 3 locations, and all of them were funded by their investors. They got an initial pool of investors that built the first one. They all get share in revenue on a regular basis, and they have equity ownership. And then when they wanted to open up a second location, they went back to those people. They could get a bank loan now because they're an established, successful business, but they went to those investors and say, we need to bridge this gap of what the loan is and what we need to do this, to pay payroll, to pay marketing, the things that banks don't pay for. We are looking to raise this amount of money. Those people that could reinvested, and then they invited new investors into that round. And then they opened up a third location and did the same thing. That's community-based investing, right? That's investing in the businesses in your community. We got a pickleball facility being built here that is privately funded by people that live in the community. And the $100 a month that members pay to be a part of that pickleball community, the pickleball club, well, guess what? Those investors that invested in that will get a piece of that. And then as it goes on to become, they're going to franchise it, they'll sell that location as a franchise and do more of it. And those investors that invested in the start of that, they have a 3-year plan to sell it. They will get their multiple on whatever it's sold. They put $3 million into putting this thing together, and it's going to probably sell for at least 30 million, right? Probably more than that. So depending on, what the reoccurring revenue stream is on that. So why does this matter now? We are living in uncertain times. People are worried about their future, the future of the world, the planet, the next generation. Will they be better off? Or will they be worse off than we are? There's a lot of anxiety. We don't know what's going to happen with our local economy. We don't know what's going to happen with the stock market. We don't know. But what you can know is that there's somebody out there that's working to solve a problem that you care about, and they're working really hard. And if you learn how to discern what do they need to succeed in that business, and do they have it, or do they have a plan to get it, and then you provide the money that helps them get it, you get to share in their success. To me, it's so logical and such common sense, but I've been doing this for a long time. So you get to invest. Here's why people have become angel investors and why you might become a crowdfunding investor too. All right. You get to invest for purpose and passion. That's the passion in Compassionate Capitalists. You get to invest in something that you believe in. Maybe it's a sustainable fashion business. Maybe it's a mental health tech. Maybe it's a local bakery. Founders that are solving problems you care about. And if you care about diversity, then you get to have an impact there. You can play a role in closing the wealth gap by helping companies that would otherwise be underfunded. Your capital brings their vision to life, and that's impact. That's impact investing. That is investing to solve a problem with so many layers of the problem that you're solving. Invest for purpose and passion. All right. It is investing for profit. You're not just donating. It's not a donation. If the business grows, your investment grows. For decades, millionaires have invested in entrepreneurs as a core wealth building strategy. They don't just invest in the stock market. They don't just invest in the real estate market. Yes, they do those things. They have all along, but they also invest in private companies. They create portfolios of early stage companies that are diversified by stage. That means from startup to growth stage, by industry. It could be a tech company, a gaming company, a consumer products company, a healthcare company, diversify, a transportation company, everything that you think about it. Your mind will go crazy. That's probably one of the biggest risks of getting started, is because you get really, really exciting and enthusiastic about this, right? Diversify by stage and industry and type of offering. You will learn in the Compassionalist Academy that you can invest to share in revenue. You can invest as a private banker. I cover this in my book, where you get paid back. This is what Honeycomb does. You get paid back a fixed term loan over a period of time. You're just getting paid like the bank, like they're paying the bank. Or you're investing in bridge financing to a big round that they're going to make. In my book, I talk the Inside Secrets to Angel Investing. I talk about the making of Compassionate Capitalists, and I share that story. And ironically, I was with the founder of the company. It is a incredibly AI technology that solves security and supply chain problems that, over a decade ago, they needed bridge financing. And my investor from the Network of Business Angel Investors wanted to get started in investing. And I told him he couldn't do equity until he had done a debt deal, so he could get some money back. Because sometimes it takes 5-10 years. As in this case, it's been 20 years. Well, the guy just went public. Right? That company went public. One of the biggest launches, and then had like $1 billion trading day. Right? You know what I mean? And I've followed him all along the way. We're still friends. This founder, I was like, dang, man, if only I had gotten some equity in that company back then. But anyway, so that's a whole nother story. But anyway, that's kind of how it works. You do the same as these investors do by building a diverse portfolio of crowded investments to give yourself a chance to multiply your wealth. You decide to learn, right? So by stage, industry, and type of investment, straight equity, and even that's different. Common, there's all kinds of ways to invest, whatever flavor you want, but diversify, right? So if you decide to learn more about this novel yet time-proven way for creating wealth, you have to decide to learn more. You have to decide to want to figure out how much money you can safely invest to build your own angel profitability blueprint. And you want to master the art of discernment, deciding which deals have the best chance to succeed. With the Compassionalist Academy, you'll learn just how. Community wealth. When you invest locally or in underrepresented founders, you're helping to close the wealth gap. This is another reason why you're closing the wealth gap and building economic resilience. We don't really know what's going to happen, but what we are looking at coming in the next 2 years is really like what we experienced with COVID, but without the safety net. So the struggle that small businesses that are, 1 to 5 employees, that are underrepresented in the financial sectors, that are strong in their local community, or those that have found and solved a novel way to create wealth and want to grow their business. I mean, a novel way to solve a problem and want to grow, right? Where are they going to get the money? If they can get it from there, and how are they going to sustain? And we can create economic resilience for those businesses being able to get money from their community, from the people that they know, their customers' friends, the people that they know in their church, their chamber, their Rotary, people that they went to school with in their alumni association, people that are their peers, people that they do business with. All those people can invest in them and share and invest in each other's businesses. And together, like they say, rising waters, all boats rise. We all can rise by sharing in the wealth of the businesses that we're supporting to grow. We can have our own safety net, if you will. So that's a major reason why to get doing this. And you diversify as a hedge of your investment. If you already own in real estate and stocks, the wealthy don't rely just on those. They invest in entrepreneurs, and you can too. The Angel Profitability Blueprint will show you how in the Compassionalist Academy. All right. And millionaires invest in startups. You can too. I'm recapping. It's not about hype. It's about strategy. Learn to build wealth with purpose and get the free guide. 3 big reasons. It feels good. It feels good to invest this way. You're solving real problems, supporting bold founders, and creating jobs in the community around the world. You help to build economic resilience. When small businesses thrive, neighborhoods do too, especially now with banks tightening up. Your investment can be the difference. It's a wealth building strategy the rich have used forever. Investors have been a secret wealth weapon for generations. Now that door is open for you, and all the tools that I'm promoting, my unique proprietary strategy of the Angel Profitability Blueprint, You can build a smart, diversified portfolio, one that mixes equity, revenue share, and income producing. You don't need to be rich like the rich, but you do need to be educated to invest like the rich. All right, as I'm closing out here, if you stayed with me this long, thank you. You're clearly serious about building wealth and doing good. Let's make this simple. Go download the free ebook, The 4 W's of Crowdfunding Investing. I got everything we talked about and more. And you're ready to go deeper. Check out the Compassionalist Academy. Use the link in the ebook to sign up to get 25% off. I'll teach you, along with some of my guests that I'll share snippets from, but it's primarily me teaching you how to evaluate deals, avoid emotional investing, and building a portfolio with purpose and profit. You can be an investor. You can build a wealth. You can help others rise while we rise together, while you rise. Let's do it together. And thanks for joining me. I'll see you on the inside of the Academy, you compassionate capitalists. And that starts with you. Thanks for joining me today. Tag a friend, drop a question. Let's build wealth with a new way together. You're not too young, too broke, or too new. You just haven't been shown. It's been a secret. You weren't aware of it. You didn't have the tools, and you didn't have the education opportunity to get educated until now. The 4 W's guide is your first step. Grab it free. Grab it now. It's crowdfundinginvestors.com.
Thank you for listening to this podcast, The Compassionate Capitalist Show, brought to you by Cougaran Capital Holdings with Karen Rands as host. You are encouraged to visit the website, cougaran.com, to learn more about how Karen and her team help investors and angel groups make money by avoiding investing in deals that suck, and how the Cougaran Capital companies and partners help entrepreneurs break through their barriers to capital and live their dream by building companies that can scale and create generational wealth for their founders and investors. If your business could benefit from exposure to our audience of business executives, entrepreneurs, and investors, we are seeking financial partners and sponsors for the Compassionate Capitalist Show to help us take this podcast beyond our 150,000 listeners and amplify the message of the Compassionate Capitalist movement by making this a top 50 business podcast. The Compassionate Capitalist Show is available on YouTube, Apple Podcasts, iTunes, TuneIn, Stitcher, Spotify, Pandora, and Google Podcasts. Contact us at KarenRands.co to learn more. And as a listener, you can do your part of the Compassionate Capitalist movement by subscribing wherever you listen to podcasts and sharing this show with your friends and colleagues. Be sure to pick up your copy of Karen's bestseller that launched the Compassionate Capitalist movement, Inside Secrets to Angel Investing, a step-by-step strategies to leverage private equity investment for passive wealth creation. Thank you for listening.